Yo, what's up, Jess? So I just woke up. You can see by the feed check, we have all the drip here. So I want to explain real quick the progress of the new investing model, the one that runs 100% automatic, that it's set and forget, and money working for you 24/5. It will be 7 if markets open 7 days, but sadly cannot smoke them that often. So here I have more or less the structure of my new EA or the B3 version. As you can see, we have 7 numbers on the side of every name or every engine. I call these engines by the A, B, and C. So we consider we have 7 logics per engine. Each logic does something different, but that's only based in what I tell them to do. The EA is not AI. It's not something that I will flex to you like a neural network or anything. It works as AI or as a neural network after we model the EA with such amount of data that is intelligent and smart enough to trade any range or any type of market. 100% automatic with no intervention, but before you do any of that, it's just a piece of code, so everything is here, yes, and let me show you more or less the progress. So right now I'm only using, let's just for practical purposes, do this quick. So for now, from all the power the EA we could consider it has, I'm only using the one that is the main logic right now. I'm using the secondary logic and the last logic. So this last logic is pretty much the one that can close every other logic or every other basket of trades. So every logic will open their own trades, and they can, depending on the condition, they might close their trades and maybe other trades when they close, because my closings are either by pips or points. See it as you are scalping the range, or I close complete baskets of orders. Since I'm a great trader and I start adding to my positions, I don't start with one lot. I diversify one lot in 10 pips, for example. I feel that adding your risk to only one position is very lazy. It's very dumb, actually. Unless you have 100% win rate and 0% drawdown, you might need to diversify, because even think that traders could reduce their drawdown exponentially if they just apply a very simple concept that is greed or diversifying your margin. But everyone trades whatever they want, they put their money whatever they want. I do this for my money. So as you can see, we have this one as the main logic. The main logic pretty much is my trigger or my execution. What that means, imagine yourself, if you're trading manual, for your account to start trading, you need to open one lot, two lots, 0.01 lot. You need to open an order, or you need to set a pending order or a limit that will be executed at one point. My EA with this logic, with power, it will be on tick. On tick means the EA will start trading as soon as it's dropped in the chart. So as soon as you drag the EA to a chart, it will start opening trades. My specific model is hedged, so I will drop one buy and one for buys and one for sells. Or if you're trading both at the same time, it will open buy and sell. That's my way of telling the EA what's going on in the market, at what price is entering, when the trend will start. Because to open more levels in my EA, price need to go against. That's why I decide to counter trade, so I don't have to worry about probabilities, gambling, or trying to predict the trend. I don't need to predict the trend. I know these markets are so volatile that they will give retracements all the time. I just need to be able to get every possible retracement and start releasing my margin or my risk in case we have heavy economical trends like 2020, 2011, stuff that I always try to explain, but I will do it in more depth in the future. So for now, let's consider that this model is only using 3 logics. So here we have, I divided the total range of 2004 to 2025 in 2, mainly to understand where I have my max risk. So here, as you can see, we have a minus 2k, almost 3% drawdown, with a 7% drawdown. Here we have almost 2%, 2.2% negative profit, with almost 8.3% max drawdown. So here is my max drawdown. My max risk is in 2023, I think. So let me show you another thing. This is the same model but up to 2025. So there's a slight difference in the profit and risk, because the difference is that sometimes when you continue the full range, for example, the one that I'm cutting at 2014, maybe I'm closing one trade that in 2015, 16 did something different, and that's why I'm having this different result, because my worst trade, very simple, how do we know that? I assign 0.01, 0.03 to my last logic and 0.02 to the second logic, so I can identify them here in the tester. But here you go to profit, you drop down the menu so you can tell which one is the biggest negative. So here you can see my biggest negative is to my second logic, but let's find the main logic, the 0.01 here. So we go in time and we can see in 2023 we open 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 levels. That means my max risk is diversified in 11 levels. So my risk still will go down from the 9%, because I need to, this will be 0.01 and the 0.03 also will be 0.01. So my risk will be reduced. As you can see, we're pretty much closing negative. These three are a structure where I'm pretty much setting the range for the other logics to make the money. So pretty much I want to set the tone for all these logics to be the ones making the money. Especially the engine B is the one that will be holding the biggest weight to make the money, and the engine C will support the risk or will try to lower it even further, because my max risk right now is 9%. So I expect these logics to start adding to the profit, you know? So now what I will be doing is I'm gonna add two more logics that act as a soft stop similar to my second logic. So the goal will be to end up with something similar to my only buy model. The one that I'm showing is the only sell, and this that is already complete is the only buy. As you can see, we have almost 200% return in the 21-year span, with a max risk of almost 36% and an absolute risk of around 2.5%. So the accuracy of my models are very high, my efficiency is very high, 5.2k volume of trades with 82% of win rate, very impressive. This is not compounding, so once you compound every profit, you will be having at least the double of the profit that we are having here with the same deposit, because as you can see, we have a risk that is flat, it's not going above our initial deposit. I control the risk because I manually trade all these cycles. It's not that it's past data. For example, I start trading during this period with my V1 version, so I have so much data to back up my backtesting or my past data models, because it's just greed. Price goes against my my EA, I will start opening trades based in greed and nothing else. The beauty of my model is that it's not complex. It's not using complex formulas or indicators, or I'm not telling you this is using ChatGPT, or like, you know, you will see a lot of flex by sellers. Everyone in this space is just a goddamn seller. So you need to start focusing in what the developer is trying to share or what is doing to explain what they do. In my situation, I'm a counter trend trader with no stop loss. I rely on grid and having an efficient diversification of my margin while keeping it safe with the max profit potential. So with the only sell model, I take my time very dramatically. As you can see here in my live accounts, currently we're holding sells drawdown because of course price is going up, but for now keep making money with buys, and sometimes we're scalping some sells. So really it's a total of 0.06 lots, adding the positive of the buy, because it will be positive at one point because the trend is bullish. So every time you get the trend, it's not bad because you will start triggering the progressions, you will start adding bigger lots, and you can either be scalping with those lots and adding to your total equity. Here you can see we have already 207 profit. So it's not really bad because it's very safe and it's adding to the profit as equity protection. So that's one of the reasons that I don't compound my models in the backtester, or add the option to compound. One, because I really don't know what the risk will be. I cannot create generic models. I need to optimize for every client's need, tailor them, and be very precise with the risk they want based in the data. And the fact that I'm not compounding gives me the option also to use the profits as equity protector, or use the profits as the ones that will hold the more risk. You can even set, for example, if you're already 10% up, you can set an equity protector so your risk won't go above that 10% that is your profits. There's tons of risk measures that we can apply, but the reality is that you need something that you understand and that the developer is trying to be above you, helping you and supporting you so you can get to this level. So the EAs that I've been testing, for example, they have very, very bad logics to when they're counter trending. So being just a counter trend trader gives me that peace of mind that I know what I'm doing, that I know what I will do in the worst case scenarios, because this is a macroeconomical model. This is a macroeconomical investing model. Of course, you can, if I show you let me go to my CV in the Discord server. Of course, if I show you my, let me go here to my trading results, of course you will be like, I want that, and everyone will want this type of return, 68% in less than 1 month, already withdraw and save in the market 3% in 1 week, 8% in 1 month, like very, very big profits in short time periods of time. I had a biggest one actually. Let me show you. I haven't updated, I think. I need to check. I was sick during this period that I was trading, so I kind of maybe forgot to add some profits, but yeah, you understand the point. This high risk trading requires more skill. It's not the same as this model that you're aiming for something that at least is higher than inflation in yearly basis. You can spend months with 1-2% or even less, and then the third, fourth month will close you 30%. So that's the beauty of this model. It's trained by a human. It's something you can understand, you can use, or you can just let it run for you. Safe, good, real, has results. I have tracking records. So stop trusting sellers, stop trusting people that will tell you that 30-40% a month is viable. Yeah, it's possible. I can make 100% in 1 day. 40% in 1 month is a joke. But the risk, what's the risk? That's something they will never tell you. Like if I drop my set files that get me the 100% in 1 day in any of these periods, I will get smoked in 1 day, because that needs management. That needs the EA or the trader to be synchronized and do a hybrid environment where both support each other. With this model, you don't need to do anything because you have such a big sample of data. Like you cannot do anything else. Everything else is just predicting or playing the guessing games. Like people that train their models or their strategies in real time, they're ignorant, they're wasting their time. That's why they never make consistent profit and will never be part of the 0.10% of the population like me that make this consistently, that can do it for more than 1 year consistently. That's because you're waiting for demo data or real-time data to prove your model. What's if it's wrong, what you're gonna do? You're gonna change everything. You're gonna continue with the model. You don't even know if the model is good. Like how many strategies every manual trader or every course seller they're selling you every year. Like they have new models every goddamn month because they cannot make work one single model. So this model has too many data. It's all the time in constant optimizations, the new data and past data. And of course, I have failed too many times in the backtester. I failed in backtesting because that's the point of using past data. Train your model with data, real data that already happened, but that you have big samples. You are not trusting just your demo account in 1 day or 2 days. And something that it's a very big lie is first go 1 month demo, and then if you make profits, then you can go live. That's a fuck lie. Like, imagine you start trading in January of 2020, and then you decide, yeah, February was also good. Then March you go full live trading with your money, and COVID starts. Like, you don't have data to trade those ranges. You don't have the ability to trade those ranges because you were trading in 2 months that the markets were not even moving, were very chill, waiting for something else, and then a pandemic triggers and markets go crazy. Like, that's a very big lie. So you need to start learning from core sellers, from mentors, from gurus, from people that sells you Discord groups or a book or trash like that. They don't even trust their strategy enough to sell you something related to that. Course sellers, what they do is they sell you something that you will take time to understand. Once you finish, if you fail, it's your fault because they will tell you, I make money with this, so it's your fault. You maybe don't learn, or you need to read it again, and that's boring. If you're paying for something, pay for school, then go to college. You're here to make money as soon as possible, with less risk possible, with the less effort possible, because traders have one thing that it's above everyone else. It's time. You control your time. It's not your own boss, but you're your own manager, your own everything. You are free of time because your money works for you. You don't work for money. You understand me? And especially if you're an algo trader, you just chill and relax, except if you're me, because I have to keep optimizing all day. I am here 18-20 hours a day, so that's the value you pay. A very cheap value to enter the top 0.10%. So have a good one, Gis.